And it's not just international trading partners Trump is threatening. Trump threatened a 25% tariff on Apple this morning, saying he informed its CEO, Tim Cook, a long time ago that he expects iPhones sold in the U.S. to be made in the U.S. Trump says that tariff must be paid by Apple should the company not oblige. And BNN Bloomberg's Paul Bagnell joins me now. Paul, thanks for joining us. The market's not happy about everything that's going on with these new tariff threats.
No, Apple shares are down. Now, they're down by about 2.5%, Roger, at this point. And I think that's telling us something about the tariff threat that Donald Trump has launched this morning against Apple. As you've just told viewers, what he's saying is that if Apple doesn't manufacture iPhones in the United States that are later sold in the United States, he will put a tariff on 25% of 25% on iPhone imports into the United States. Now, that would raise the price of an Apple iPhone 16 from about $1,000 US to about $1,250 US, and an Apple 16 Pro iPhone, which currently sells for about $1,200 US, would sell for about $1,500 US. Those are very expensive iPhones, and I think what the market is saying today is that the market doubts, I think, that these tariffs will come to pass. Otherwise, I'm sure we would be seeing Apple stock down by a lot more than 2.5%. On the European tariffs, we did see European stock markets react immediately after Donald Trump made that tweet. That tweet came at just before 8 a.m. Not a tweet, a post on his Truth Social network. That post came at just before 8 a.m. Eastern time, and if we watch for instance, the French stock market, it's an index known as the CAC 40 index. Right at that point, at about 7:50 a.m. Eastern time, it plunged on that news. The same thing with the market in Germany as well. And what he's pledged, of course, is a 50% tariff on all goods from the European Union. Again, I think even though markets have come down on this news, I think the interpretation of a lot of investors and market professionals is that this is a bargaining position intended to bolster the U.S.'s position in difficult trade negotiations with the European Union.
Just want to go back to the iPhones for a second.
Sure.
And would it be realistic to expect they could be made in the U.S.?
Labor costs would be much, much higher. There's a reason that electronic goods are made in non-North American markets and non-European markets. So that's because the cost of labor is much lower in Asian markets. We have seen Apple already move some iPhone production out of China to India, but Trump has made it clear he's not happy with that move. So is it realistic? Anything's possible, I guess, but it would be a multi-year project, I'm sure, for Apple to move a significant portion of its iPhone production to the United States. The United States is its biggest market. It sells more iPhones in the U.S. than anywhere else. And even after undergoing the huge expense of building new factories and hiring new workers in the United States to make iPhones, it would be paying much, much more on labor and other associated costs. So the price of those iPhones, even though they would not be tariff affected, we assume, the price of those iPhones would certainly rise to U.S. consumers.
Okay, Paul, thank you as always.
Thanks a lot.